Welcome to another Central Bank of Kuwait podcast, which aims to present economic viewpoints and increase awareness on key economic concepts and developments that impact the life of individuals and communities. I am your host, Sheikh Al-Rafai, Senior Entrepreneur at the Central Bank of Kuwait, and our topic for this episode is corporate governance. Our guest today is Wadha Al-Naidi, Senior Financial Analyst. Welcome, Wadha.
Thank you, Sheikha.
Before going in deeper into the subject, could you please define governance for our listeners and tell us why the concept came about?
First of all, allow me to welcome our listeners. In the second half of the 20th century, the world was going through major economic crises and events, which included the collapse of big corporations and the emergence of financial corruption that deeply affected public confidence in financial markets and led to huge losses among investors. These crises exposed the dangers of lack of supervision over companies and corporations and lack of transparency in their financial transactions. And among such major incidents was the collapse of Enron and WorldCom in the United States. These crises prompted regulators, investors, and international institutions to seek a regulatory framework to guarantee that corporate bodies are run in line with standards of justice, accountability, and transparency, and that the rights of investors and stakeholders are protected. International institutions, such as the Organization for Economic Cooperation and Development and the World Bank, heeded the call and developed principles for governance for companies and corporations. These included principles that corporate entities are urged to abide by to guarantee sound management and avoid conflicts of interest, such as transparency, accountability, protection of shareholders' rights, and justice. As time passed, the concept of governance became essential to major corporation strategies and was adopted by stock exchanges and regulatory bodies in many countries as a prerequisite for listing of a corporate entity in a financial market or stock exchange. Since upholding the concept of governance attested to an entity's responsibility and credibility, which boosts investor confidence and contributes to financial system stability.
You mentioned that some international institutions issued principles and guidelines for governance of companies and corporations. Would you expand on this point?
Yes, of course. In view of the importance of implementing guidelines for sound management in any corporate entity, several international institutions and organizations issued principles for corporate and bank governance, and these include the Basel Committee on Banking Supervision, which introduced several issues on this topic, most significant of which is the Core Principles for Effective Banking Supervision, issued in 2006 and updated in 2015. These principles aimed to steer banks to implement sound governance practices, to assist in risk management, and pertain to the role of the Board of Directors, internal supervision, risk assessment, and financial data disclosure. The Basel III framework was also issued, which included governance principles aiming to curb operating risk and enhance transparency and accountability within banks. Other international institutions include the World Bank and the International Monetary Fund, who also presented recommendations and guidelines for corporate governance in developing countries that are meant to support financial stability and economic development. Central banks and financial market regulators in many countries also issue and supervise the implementation of principles of governance within entities they regulate. It is also important to note that credit rating agencies such as Moody's, Fitch, and others take governance into consideration when rating financial entities, which encourages the latter to implement and enhance governance practices.
Interesting. You mentioned that central banks issue or specify frameworks for governance. What is the role of the Central Bank of Kuwait in this respect?
Banks and corporations in the state of Kuwait operate within a regulatory and supervisory environment, with appropriate legislative frameworks for sound corporate management, especially in the view of the Central Bank of Kuwait's systems and instructions, covering the different facets of the banking and finance business. However, with increasing international keenness for sound corporate management and in view of recently exposed risks in world markets due to unsound practices, in 2004, the Central Bank of Kuwait issued directives to banks and investment companies relating to principles of sound management in financial institutions. The Central Bank of Kuwait later on updated these standards, taking stock of lessons of the financial crisis of 2008, as well as taking into consideration issues by international institutions in this field, such as the Basel Principles for Enhancing Corporate Governance, the Financial Stability Board publications on compensation systems, as well as recommendations included in the World Bank report on assessment of governance standards in Kuwaiti banks. The Central Bank of Kuwait issued governance guidelines and systems in 2012, which supersede the directives issued back in 2004 on principles of sound management for banks. It is a fact that alongside conventional banks, the Kuwaiti banking system also includes Islamic banks, which have specific attributes such as working within the constraints of Islamic Sharia and implementing Sharia supervision. Which is why the Central Bank of Kuwait issued instructions pertaining to governance over Sharia auditing in Kuwaiti banks in 2016, which complemented the instructions on governance guidelines and systems in Kuwaiti banks issued earlier in June of 2012. Since corporate governance practices and principles of sound management are ever evolving, the Central Bank of Kuwait is keen on continuous assessment of its governance stance and updating when and where needed, in line with the latest global standards. It had accordingly issued an update of the instructions in 2019, adding new angles of focus and stressing the importance of several practices. Most important among the additions is stressing the importance of including an independent member in the board of directors and their subsidiary committees to stress the principle of the autonomy of the board of directors. The updates also included stressing on the importance of risk governance, covering aspects of information security as well as cybersecurity, in light of increasing information security systems challenges posed by accelerating technological developments in the banking business. Within the framework of macro risk management, the edits included an addition of a compliance function and stress on the role of board of directors in risk management.
Undoubtedly, reviewing all governance principles and guidelines would require a significant amount of time, so maybe you could briefly mention the key recommendations and principles outlined in the CBK instructions that aim to strengthen governance in the banking sector.
Like you said, there are many governance principles, guidelines, and recommendations in the Central Bank of Kuwait's instructions. Some of the most significant points include, firstly, a more involved role for the Board of Directors. Secondly, identification of the responsibilities of executive management, its role, and the qualification and expertise required for those in management positions. Thirdly, drafting bonus principles, systems, and policies and making them proportionate to long-term rather than short-term risk and bank performance. The fourth point revolves around enhancing disclosure and transparency standards of banks' legal and organizational structures. The fifth point is developing systems for internal supervision, risk management, internal and external auditing, and related sub-policies and guidelines. The sixth point is putting in place autonomous supervisory functions, including the establishment of an autonomous and efficient internal audit system. The seventh point is stressing ethical, behavioral, and professional values and the responsibility of the Board of Directors to identify these values through the adoption of policies and codes for professional conduct and avoidance of conflicts of interest. And lastly, the eighth point is including independent members in the Board of Directors formation, as well as subsidiary committees, and adopting compliance governance and cybersecurity governance within the framework of macro risk management. As for instructions relating to Sharia governance, we can point out three main points. The complete Board of Directors supervision over Sharia compliance in all of the bank's business, the formation of a qualified Sharia supervision authority capable of considering diverse matters and presenting opinions and recommendations from an Islamic perspective. And lastly, sound management of Sharia risks to identify risks of Sharia non-compliance and taking the appropriate remedial measures.
So what are banks required to do in view of these instructions?
Banks are required to prepare a governance guidebook, which should be approved by the Board of Directors and ensure it is published on the bank's website. It shall, as bare minimum, include the guidelines and controls included in the Central Bank of Kuwait's instructions. Banks are also required to form a committee comprising of 3 members of the Board of Directors to be recognized as the Governance Committee, with at least 1 independent board member in the formation. The functions of said committee include preparing and updating the Governance Guidebook, following up on implementation of what is included thereof in terms of standards and controls, and reporting to the Board of Directors in this concern. Banks should also prepare, as part of the bank's annual report, a governance report indicating the extent of compliance with articles of the Governance Guidebook. The report should indicate implementation of instructions as well as justifying lack of implementation of any article, in line with the comply or explain policy. Lastly, all banks operating under the constraints of Islamic Sharia shall prepare and issue the resolutions or opinions of the Sharia Auditing Committee.
This brings us to the end of the CBK podcast. So thank you, Wadha al-Nadi, for your valuable contribution as we discussed corporate governance. Your host was Sheikh Al-Rafai. Thanks for tuning in.